Hello, friends, and welcome to the second series of Lessons from the Masters, brought to you by Aditya Birla Sun Life Mutual Fund. As you are aware that Lessons from the Masters is a popular webinar series where top MFDs and trainers share the nuances of various aspects of the distribution business. In this context, we bring to you an interesting episode today, assessing needs and requirement of clients. Guys, we all know that we should understand needs and requirement of our clients before getting into any business relationship. However, understanding this complex subject is easier said than done. Hence, to help us understand the nitty-gritty of evaluating clients' needs and requirement, today we have with us Mr. Lovaii Navlakhi of International Money Matters. Lovaii has over 2 decades of experience in investment management. I must say that he was among the first few advisors who started charging fee from clients. And today he runs a successful business empire, International Money Market. Lovaii will be in conversation with Mr. KS Rao, Head Investor Education and Distribution Development at Aditya Birla Sun Life Mutual Fund. So friends, as we all know that KS is synonymous with education of investors and distributors. He is on a mission to make India financially literate. In fact, under his leadership, his fund house has won Asia Asset Management Award for the fifth time in the area of investor education. Recently, the fund house has won 4 awards from Nivesh Manthan in the field of best fund house, investor education in both social media as well as on ground. So without wasting any single minute, let me welcome Mr. KS and Lovaii. Over to you, Mr. KS.
Thank you so much, Nishant, and good evening. Thanks, Lovaii sir, for taking time out. It is going to be very insightful session for the audience. And good evening, friends. Thanks for joining. It's a Thursday, and learning from the masters incidentally happens on Thursdays. Thursday considered to be Guruvar Guru ke din, and साथ साथ 13 July 13th July we are celebrating Guru Purnima. Today, the second series is the first session of the second series of Learning from Masters, starting from one of the gurus, whom I myself consider as a guru, because the whole journey I was, at least the journey of this journey for Lovaii sir could be 22 years, but I have seen it last 17 years. I met first 2004, and I have seen how the things are growing and how it is shaping. And one thing which I observed is single-minded focus on what he is doing, and he is not only a pioneer, and is the initial and the first batch of CFPs and first money matters which started in 2001, but 2002 which is expanded to beyond, and it's a protection piece which has taken. Then 2003 it is a first advisor to charge the fees. Even today many of us are hesitate to do. Then the first financial planning firm, and the money matters to the international money matters. And if somebody can visit their website, you get a lot of stuff which we can learn, we can practice. It could be, the mission statement speaks about not just about the client. Vision speaks about all the stakeholders, and it also gives the clarity and the transparency. How it's a profit to the stakeholder and profit to the shareholder. That's a fantastic thing. And last but not the least, the many awards and accolades. Year after year, the awards at Outlook Money and earlier with the CNBC, that speaks volume. And whole gamut of financial planning is being done at International Money Matters. And if someone is a client for I feel the financial independence first step is already done. I think it is a lot to learn, and it is a day we can go and have a lot of insightful conversations. These conversations we run for next 30 to 45 minutes. But please use Q&A box to put all your questions. Anything on the mind or anything generic you want to discuss, please put it in the chat section. Hope I am audible, and both of us are visible. In that case, please type in the chat section why, so that I can get a clarity what need to be adjusted here. Can I look for a chat section? And I look forward some interaction. Let this be an engaging session, and I look forward. Thank you so much. Ajay, Himanshu, Mr. Manju Gupta, Amit Sharma, fantastic. That's fabulous. And you're always energetic. Thanks, Ashwini, Abhijit, Venkatachalam, and Chituru Raman, and Satish. Excited. Thanks, Anita ji. And let us start the conversation. Sir, good evening. And indeed welcome. And it's going to be, I mean, I'm always excited to have any conversations. And most of your conversations with you led me to go back at drawing room and do something which is either for the MFD favor or for the investor centric. In fact, for her, the women initiative, which we have launched, educating women, it was a conversation which led about the segmentations which you spoke. Then that was a thought provoking. Then I went and started doing something. And I always look forward now, my pen and paper ready along with the audience. I can look at. To start these conversations, we would like to hear your journey. I know it's 45 minutes is very short to speak about the journey itself, but in a crisp, precise, concise way, the journey which started in 2001 and leaving one of the no, leaving the job and starting at that time, and none of us are aware how the financial services shape up, and the industry itself is changing. In a landscape has changed today. Today we are at a much more comfortable position than it was in 2001. It was very uncertainty, and we don't know how we can make money, how we can make the clients make money for our clients. Things are not very clear, but you have seen what is going to come, and I'm sure the initial days was not as easy as it is today. The challenges. Probably we would like to hear something, the whole experience from you. Thank you so much once again.
Thank you, Mr. Rao. You are always very profuse and liberal with your compliments. And I always worry that before someone has started speaking, when you hear so many good things, then the end performance is always lower, than that benchmark you have set. So I will try and get and stay as close to the benchmark as possible. The question you have asked, as you mentioned, is a really deep question. So I feel like going back 21 years and talking in detail. But what I will say is that for me, some of the foundations of the way I started the business got set a few years before I started. So I know that for me, the first exposure to any concept of financial planning came when I was in my late 30s, and one of the fund houses which had launched in India at that time gave me a questionnaire and said, write down the age of your younger child. And they calculated and said, this is the amount you need to invest every month to educate your younger child. And when I looked at that number, it was more than what I was earning then. So I said, forget younger child, even elder child, I'm not going to be able to educate. And the only thought that came to me at that time was, I wish somebody had told me 10 years ago what to do. So that became one sort of niggling, I would say, thought in my mind. After that, I joined a .com. And during that period when I ran the personal finance for them, I was again talking to my colleagues, etc., about the importance of investing. In those days, there was no checks, etc. So people would come to me and say, I have worked for so many years, I don't have any investments. So I would say, you have 500 rupees in your wallet? They'd say, yes. I said, give me that note or 5 notes. I don't even know whether there was a 500 rupee note then, and said, here is a form, fill it up and start investing. So I said that the other thing that came, that I got exposed to again prior to joining that .com in that previous company, which was financial services, was that every time a new product was available, I would go marketing it to everybody or talk about it to everybody. Nishant, KS Rao, and all the, all the audience that is there. If I could find them, I would tell them this is a great product. Back of my mind, I knew it was not great for everybody, but that was the only product that was available. And I said, I wish, that we can give a product which is suitable to people. So the right product for the right person. And therefore, let's just do what's honest and right for the client. So these two things were sort of the background with which the business started. The .com, days, the heady days got over very quickly. A lot of us were pink slipped. And some of those colleagues whom I had helped with starting investments asked me whether I was going to start something of my own. And I said, no way. I will look for a job. I'm used to getting salary at the beginning of the month. But, 10, 12 of you, no problem. I will manage wherever I am. I enjoyed that initial period of a month and a half when I started, when they got some settlement amounts and I told them, how to go about investing, ask them, oh, how many years for your kids' education? When will he go into engineering? Or so many years, then invest like this. No idea about the concept of financial planning, frankly, did not exist in 2001. But I did some of that, and I started off. Luckily for me, I think the job market was dead. It took me about a month and a half to get a job offer, which I then, in 2 weeks later, I rejected and said, no, I'm happy doing what I'm doing. And that's how the journey actually started.
That's fantastic, sir. It is very nostalgic to recall what 22 years, and all MFDs who are now in the audience and who will be in the social media for us today. Probably this is a journey most of us will start. We don't know where we are going. It is an initial phase of uncertainty and initial phase of little. It's not by design. Sometimes some things will happen by default, and it's a very, but it is evolved. There is a structure. 2001. And the step 2002 is you're taken the protection is a need, then understanding has gone to the next level. But the very interesting part at that point of time was charging the fees was not easy in 2003. And you got that idea to charge the fee to the investor. And investors started paying we may get an idea, like most of us, we say, let me start charging, but how many of them will ready to pay? And in Indian context, paying is the biggest issue. However, I've seen some of our good friends who are RIs, who are senior MFDs, they're very rich clients. The moment there is a fee comes in, there is some kind of reluctance, or as if I am doing a favor kind that is coming in. And what is that? How that idea has arisen, and why? How the people are willing to pay, or what is your conviction note to them?
Yeah, so I will come to how the idea came, but I think that when you understand that you are collecting fees from clients, for them it's a cost. What you have to deliver is value. If value is greater than cost, then they are fine. Now, obviously, in a service industry, it's not as easy as a product where you say, oh, this is the benefit of the product, so therefore I'm willing to pay this cost or price. So you'll have to build on what is the value you are providing. And it can come from various ways. So we won't get into that, but I think that's the one thing you have to always remember. And obviously, you have to believe in it yourself first before you can convince anyone else. So if you are not believing, then that's the first step to ensuring failure in getting that across. I think I was particularly very fortunate. So let me first describe the period that when I started off. I was a newbie in this space. I used to look up to many of the other distributors at that time who were previously fixed deposit brokers, etc., and who had got into the business, whom I knew from my previous sort of jobs. And I would always, whenever we would meet at any mutual fund launch, and there were many launches, very many dinners, etc., we had at the cost of mutual fund companies at that time. I would ask them what they are doing, and they would ask me what I was doing. And invariably, it seemed like they were, asking me what I was doing so that they could follow. And I used to ask them saying, oh, since you are the veterans, I will follow you. But I think I was very fortunate with my initial set of clients. Because in 2002 itself, some of my clients actually gave me the idea and said, you should charge fees. And, exactly like how everyone feels or must have felt at that time, I said, no way. There is an embedded commission I'm making, earning from the product. So there is no need of fees. But some of them persisted and said, no, what you're doing is something different. I frankly don't know yet today what was it that they saw different. But I think I was only asking them questions about the why about the money. It was not always, oh, here is 2 lakh or 50,000 or 20,000. I mean, those were the amounts in those days. It was always asking, saying, okay, even if it is 50,000 rupees, okay, where else have you invested? What has been your experience? What is the actual goal that you want to achieve? So they said, no, you're doing more. Now I had come off a .com. So what was common in the .com was SLA, service level agreement. So that is the first thing I thought of in 2002, saying, oh, that means if they are willing to pay fee, two, three things. One, I can't only charge fees from people who are willing to pay. I have to ask everybody. And two, I should document and say, these are the things I am going to do. These are the things you have to do, etc. So I made a very rough version of an SLA. And because this conversation was going on, actually, I distinctly remember it was 2nd of January 2003. I was at Bangalore airport, the old HAL airport, waiting for a flight to Madras or Chennai. And I met my ex-neighbor. Flight got delayed by, I think, half an hour. I think I was going to Chennai, he was going elsewhere. So we were in the lounge and we started talking. He was asking me what I do, etc. He asked me, I explained to him. And at the end, he asked a question which I'm very grateful for, which he said, so how much do you charge? So I told him 5,000 rupees. And he said, oh, okay, fine. He didn't blink an eye, an eyelid, didn't bat an eyelid. And I said, oh, okay, that was easy. He never became a client, okay? But that conversation was very important because that was my first sort of breakthrough with somebody about fee. So I came back from that trip and I met my client the next weekend in Bangalore. One of my clients who was a client for a few months, and he was every 2 Saturdays or so, he would bring one colleague from his office and come and say, no, this guy also needs to invest. I brought him here. He wouldn't ask. He would just turn up at the office with one reference virtually. So I said, oh, he's a good guy to ask. I said, I'm planning to start charging fees. So he says, oh, how much? So I said 10,000 rupees. He said, let me try. 5,000 went through very easily, at least from my tongue, and no objection came. He said, no, that is too high for me. I should. And that started the journey of my doing what I would call in my terms market research as to what fee my clients were willing to pay. So I started talking to different clients at that time saying, I'm planning to charge fee. One of them said, no, but what about my family? Because there are multiple accounts. You will charge that's 5,000 or 3,000 or whatever for each. So I said, oh, okay, that means I have to have one individual fee and a family fee. All of that happened. It took almost 8-9 months. And in those days, I used to print out one newsletter which I would send to my clients. I was very afraid of asking for fee, despite all these conversations. So I put in the newsletter that the fee is going to be 3,000 rupees if you are an individual, 5,000 if you are a family. Family will consist of husband, wife, son, daughter, father, mother, and one HUF, because I had one client like that. So I said 7 accounts will be family. And I said, because I'm charging it in October 2003 onwards, it is only half year fee. So I said, let me get them enticed by 50% discount first year, because once they agree, then next year they'll pay the full year fee. And I put it in the newsletter. And I sent the newsletter to my clients. I don't know the number of clients that at that time, maybe 40, 50, maybe in that range, I'm guessing. And the next day, 2 clients sent me checks. There was no online and direct credit and all that in those days. They sent me checks of the fee. And I said, wow, that was good. Now I'm feeling confident. One of the clients called me and said, till yesterday you were offering this free. Now there is fee. What has changed? I said, nothing has changed. This is the business model. He said, if that is the case, I will stop and I will leave. I said, no problem, leave. I tried telling him why fee was important, but he said, no, I will then manage. I said, sure, go ahead. Till today he's in touch where very often he will call and say, now this problem is there, this demat account, this is the problem, this investment, can you get it redeemed for me? And I say, okay, fine. Once in a while when he does get in touch, I do take his call. But I think there were 2-3 lessons learned. One, I think you don't get in without doing good amount of research as to what the market can bear, because that's the first step, at least initially. to be willing to let go people who don't fit your bill. I mean, again, going back to segmentation, that my client will be a client who's willing to pay fees, willing to give me time, who wants to share goals, wants to give me 100%, at least information about all their assets. So I said, yes, that is the way it would work. And that's how it started, the fee journey. And many years later, in 2009, when entry load went, it was so easy to tell clients. And of course, transparency was very important. So I always told clients that the fee is very nominal because there is a high earning from the product. But I'm charging you the fee for, okay, sending you statement, making sure that I'm not incentivized to churn the portfolio just to get that commission. You know what was going on in those days. So I said, yeah, that's the reason I'm charging the fee, and people paid. So once they knew that this is what I was earning, when that earning stopped in 2009, when entry load went, it was very easy to tell them, remember I told you 2.25% entry load, most of it was coming to me, it stopped. Now I'll charge you transaction fee. And we moved very easily to that for a year before we then moved to AUM fee.
It's all that, you need to have the transparency, conviction, and conversations to the clients in an open system. I think, that makes, and once you have put one willing to let go, like, I'm not attached to it. If you are not interested in my way of doing, and you have a choice to go, and I deliver my best, that's where that confidence will come only when you do a lot of homework, lot of learnings, and where your confidence and your own ability do difference. And here we will go back to the topic for the day today. I mean, we were looking at not the needs of the customer, understanding the needs of the customer. Most of us do understand its generic in statement, and needs and wants we spoke many a times. Today we are talking about a thin line between needs and requirements. And most of the MFDs and RAs, what kind of how they can help the clients to accomplish their needs, and what is that weightage they need to give. What is the requirement? It's probably requirement is the one things they need to keep it in order to achieve those goals. It's underlying thinning, and this gives a bigger conversation. Would you like to share some thoughts around that so that we can extend that conversation? And the later part, we can also connect maybe an offline question. I can put it online, and because that gives excitement to a lot of our participants. The journey in 2001, it could be, where we have started. It's a milestone is at 0. And today, the thousands of people who got benefited. And I believe now assets under advisor is a little over, latest data I have not seen, but it is a substantial jump from, it's substantial. It's both ways. And and currently your team is, I've seen your team, whoever so with your ex-colleagues and your current colleagues, the kind of knowledge they carry, kind of integrity they carry is a phenomenal. And we have established that. And probably a story of these two, what is the needs and requirements, and how this journey of developing the team, developing the assets, and, is that vision aligned, or there is a focused work around that?
So I think on the needs of clients, I was, again, like I said, because of that experience I had of regretting or thinking I should have known 10 years ago what I should have done, I was very sort of focused on trying to understand why people are, my initial clients were investing. And again, grateful to the industry, because in the early days, I would be the person who got the form filled up the form, and also the courier boy to go to the fund house and, deposit it, try and get the statement, enter stuff in Excel to report back to client, all of that. And in one of those visits to one of the fund houses, in Bangalore, the salesperson told me that, why don't you wait for some time, because my CEO has come down from Bombay and I want you to meet him. And he spoke to me about CFP, and he said, CFP is coming to India, you should enroll in the program. And there is this introduction session that is happening. Why don't you come and attend, next week or 2 weeks later, or whenever it was. So I went and attended, and they explained this concept of, looking at goals and trying to estimate. I said, oh, I was doing this, but I didn't know it was financial planning. Of course, very much at the surface. And I said, oh, then therefore it's a good idea to get this chapa of CFP. It'll be good. It'll be learning for me. So I enrolled and did that CFP program, and that I think reinforced the importance of understanding goals and needs and requirements. And I think initially it was all to do with mathematics, and Excel sheets and what is the life expectancy and what sort of inflation you should take and stuff like that. But over time, it has moved very clearly to helping drive client behavior. And that is coming a lot from experiences of previous clients. So, if the benefit of having interacted with so many clients does not get passed on to newer clients, then what is the idea of that benefit? So whatever mistakes, we might have made with the early set of clients or early planning, etc., we tried to incorporate. And I think it got deeper and deeper into that area of understanding behavior, emotions, also some of the data based approach that typically the West has versus anecdotal that we have. We meet 5 people and say, oh, all my clients or all clients will always do this. And I think that is very important to remove your ego or your bias when you're dealing with clients, because you tend to think what you have learned and you are the superior, and your relationship with client will only be great if it's at an equal level. It cannot be one is higher, one is lower. You can't be higher, or you can't be no, that person, my client is CEO or MD of that company, so I am a junior and I will take instruction. It does not work. You will have to be at an equal footing with that client, and for that you need to put yourself genuinely in their shoes. So if that client is, let's say, a single parent, but you aren't a single parent, you'll have to start empathizing and reading stuff about that to be able to do a good job with that person, or whatever, a stage of life, etc., they are in. So I think that was very important. The piece on team, etc., I would say came again from a survey that we did in 2000 and maybe 5 to 7, somewhere in that period it was. I had a classmate who was running a consulting business, and I was telling him I need your help. He says, no, I'm very expensive, but okay. He was Bombay based. So he said, when I'm in Bangalore next, I will come drop in. And he met my team. There were some 5-7 senior people there that time. We interacted with them and he asked them, he says, why are your clients with you? What will make them stay? What will cause them to go? And that team of people, my team was happily giving him the answers. And the question then he asked them was, how do you know? He says, oh, Lovaii sir, or whatever they called me, said he told us. So he said, why don't you know? He said, no, because only he interacts with clients. So then why don't you do one thing? You'll have 5 of you, call up 10 people each and ask them these questions. And 2 days later, after I finish my other assignment, I'll come back and we'll have a chat. So they did that. They may have spoken to 30, 40 clients. And the single sort of feedback that came was that we want you to be more proactive. And these were the same clients who were referring me clients and saying, okay, refer one more and you're the only person meeting. Obviously, my time is going to get used because now they're referring somebody else. But yet they want me to be proactive. I said, oh, that was the day I decided, oh, great. That means I have to pass on stuff to my team. And that's where it started saying, okay, great, I will pass on stuff. I was very reluctant initially to give, let's say, some school classmate who was a client. So I knew him from really long period of time. I said, oh, how will they handle? I can handle him better. You can always handle some clients better. You will never handle all clients better because you can't handle all clients, full stop. Better and all comes only if you can handle. So that's when the team piece sort of came in. But that was later to deal with clients. But team initially came in because I realized I can't do everything myself, update, get the forms, get things filled, respond to emails. I mean, everything you can't do if you are looking at scale. So I started, with freshers. That's the only way. I mean, nobody else would have wanted to join me at that time. And whoever was willing to join, then we took in the beginning, because that was the only choice. You didn't have a choice. I tried getting people with experience. They lasted very few months. So it was freshers and trained them, and that worked. And today, I think I look back with having created quite a few entrepreneurs in the industry, many of whom compete with us. But I'm very happy that it's allowed to expand the market. Of course, you feel sad when some client leaves and joins them. But our mission says we must do what's right for the client. If the client believes it's right to go elsewhere, then that's what it's achieving our mission, right? So,
I can see, when you go to your website and see International Money Matters, the tagline speaks all that, whether it is a team or colleague, or the investor, it is an expert with heart. Sometimes you are giving that. And I've seen the initial lot, they're very lucky colleagues, and today they themselves also doing very well. But all said and done, they say, I am an ex-IIM guy. It's IMM or IIM, that's the way it looks at that way. And I also love that tagline. Another one which you use is transforming lives. One at a time kind. Now we go back on this needs and requirements and the topic, and how that you differentiate. And second is when you have this conversation with the client, how you identify that.
So I think the underlying for that is the financial planning framework, and that really helps. So linked to that charging of fee actually was also the fact that we want to know everything about you. Even if you have invested with 3 other people, you are wanting to maintain your gold status relationship with your bank or whatever status, that's fine. But you give us everything, because only then we can give you true advice. And that is the first step. So once you get everything, then you're looking at the financial planning sort of approach and saying, what are your goals? And those goals can be personal, can be family, can be fun, could be commitments. So once you have that framework, it is automatic that you will get all the goals. And when you say goals, it becomes a technical term. I think for clients, you're essentially talking to them about their dreams and desires. And you're trying to say, okay, can we convert all of this into some sort of formula so that all your dreams and desires are met? And you can start off with, when we do the exercise, to figure out what is it that is needed for them to achieve those goals. When I say what is needed, means what is the rate of return, which will translate into what is the asset allocation. And then you can map it back with their comfort levels. And if comfort level and what is required is not matching, then they have to make a choice. So it's always conversations which will help define the needs and requirements. I think the benefit that you get beyond the financial planning framework is when you're talking to these different sets of clients. So once you have spoken to the first set of clients, when you get the next lot of clients, and obviously this comes on a continuous basis, it's not that you're doing phase wise, but if there is learning from that, from another 45-year-old who was facing a similar situation or had similar goals, and there was some conversation about it, then you can also have the conversation so that you can get people to go beyond the standard. Okay, I have to look for my child's education, my retirement, my home, child's marriage, maybe a holiday, that's it. So it has to be well beyond that. So you are then able to have conversations saying, have you thought about this? Have you thought about that? And one of the ways we realized that this could happen is if we could have conversations with clients about their will and transfer of asset. Because now then you're looking at things well beyond their current lifetime. Because typically from an investment standpoint, you only talk about lifetime. You don't talk beyond that. But then if you can go beyond that, then you are getting deeper and deeper in terms of conversation. And then you can even direct some of the investments in a manner that fulfills that requirement that they want. at a later stage, So I think all of that sort of helps. And I don't think there is a very, what should I say, very clear line between this needs requirements bit. I know there's been a lot of talk about needs and wants and all that. We start that at the basic level. But I think each one of us should actually do some thinking. There will always be things where you will splurge more money on than you feel good about today when you look back and you say, oh, that thing I should not have done. And there will also be many things where you should have spent, but you have, tried being miserly, or, let me negotiate and say, no, no, only if it is this I'll do, and then say, oh, no, I should have spent that little extra. No, I was willing to go up to 90. That person said 95 and I didn't do it. Now I'm regretting it. So each one of us will go through those phases. And I think it's, as human beings, and as I figured that human beings and their approach is the same, as in the underlying is the same, which is we are all very rational human beings. We will do a lot of analysis, but we will ultimately act only on emotion. So the trigger will become an emotion which forces me to say, well, now today I have to sit down and write my will. Otherwise, rationally, I know, yes, I am doing this, or even tax returns. Yes, I know I have to do 31st July, I'm at 7th. This weekend I will do. Then that weekend will go, next weekend will come, third weekend will come. Then 29th July, I will be running helter-skelter to try and do this. Right? So ultimately, it's the human being, and you have to deal with that.
Yeah, absolutely. And it's, of course, saying is easy and doing is the most difficult, even as an advisor when somebody is doing. And I'm sure your team using some kind of templatizing, because you have a large number of clientele today, and which cannot go the way we can just talk and we can complete it. And each of us can do very differently. There is a method to the madness, and we need to. If somebody, there are quite a good number of advisors who are here. If they have to templatize these questions, majority of them, so those who are CFPs, yes, they have a structure. Those who are not CFPs, they have evolved a structure. But if there is a simple, any advice you say on the templatizing these questions to get those needs very right, because if these initial questions of the needs and requirements right, rest of the journey I can run very clearly with investor, and that can help me to go deeper and share of the wallet or the entire wallet I can take.
Yeah, so I think the simple way to ask the client is, what money do you need, when do you need it, for what purpose? And put everything at today's value. Don't worry about the future. And then you will have to ascribe the inflation rates for each of those different goals. You should do some reading, and arrive at what should be inflation for education, what should be inflation for retirement, which country, etc., etc., and arrive at that. So that is the first step. But I think while you templatize things, and these are generic or basic things that most people will have, provide for some space of open conversations or open questions where people can really describe why, let's say, something is a priority one over something else which is priority two, or why is it so important for them to ensure that let's say the medical needs of parents are provided for. I think the why allows you to engage deeply with the client, and that is important to allow for. Of course, you have to learn how to deal with that. It's not just, oh, please tell me why, and say, okay, thank you, very good, tick mark, question one answered. Now next I will ask you, why did you do this? Then the client's not engaged. You'll have to do follow-up questions. It's like our conversation today. You will ask follow-up questions based on what I respond, then it feels engaging, right? Not only
Absolutely.
to both of us, but to the audience as well. So we can have some idea, oh, these are the type of questions, but I know our conversation is going in a different manner because maybe I'm responding differently.
Yeah, absolutely, I agree. And there is a structure always. But if I can put it, many a times you say three things to follow, three things, one to start, stop, and continue kind. If I can say the RAS and MFDs, keeping three things in the mind to evaluate the need and requirement of the clients. And there are some questions are flowing. I request audience to please use Q&A. Some of you have raised the hand. If time permits, we can speak and have a conversation, but depending on the time. However, you can just post it on the Q&A, then we can take it. And the question back to you is, sir, what are the three things MFD and RIA to keep in mind to evaluate the needs and requirements? Though you said the templatizing part.
I think, yeah. So number one, I think remember that every individual is unique. So don't think that, two 45-year-olds will have exactly the same needs, requirements, because their experiences may be very different. The second is that, you have to keep asking the questions, and very important is to listen. And listen is, deep listening. So just calmly listen, not be in an eagerness to respond and, give your sort of feedback. And I think the third thing which I mentioned earlier is essentially you learn from a client's experience, and if there is some learning from there or some mistake that has happened from there, make sure that that portion is shared, because then you will have exponential growth. Because then you will be treated as, oh yeah, you are the expert in that area, because you've gone deeper than just the first layer.
Absolutely, sir. And the extension to that too. I mean, it's like there is a difference between needs, then there is a requirement, there are aspirations, and there is a question which is coming from the participant is also, how do you go about probing your clients to share their desires and aspirations?
I think first and foremost, you have to give them an environment where they feel comfortable sharing this, right? So if tomorrow, let's say, someone came up to me and say, oh, you've been there in the business 21 years, tell me what are your dreams and aspirations, I may not respond, because you've asked me a question in a manner which I don't feel comfortable to answer. But if I can make the client comfortable in saying that, why is it important that I understand your dreams and needs and aspirations? What will I do with that information? How will it help me to help you? And ultimately, it has to be that you in mind, right? All the time. It can't be that, no, I just need it for my database, give me the information. They are not going to give it to you. Because I think I could see when I started off, some of the mistakes clients were making, which is, I will distribute my assets through to three distributors, three advisors, and that way I've got diversification. And then when I would ask them where the persons have invested, you look at it and 80% is overlapping. It's same. Then what is the big, allocation or distribution that you have done? You have not reduced risk. Yeah, the only way you have possibly reduced risk is, okay, not one person does not know all your information. But in today's time and age, I think it is very easy for people to find out stuff if they really wanted to find out. So I don't think you should worry about that. I think it's important to really, like I said, explain how you will use that information, and the client should really feel that, yeah, by sharing this, I will learn something in return. It's not that they are just going to share very easily. I mean, I'll give you an example. Yesterday, I met someone who's in his 50s, was CEO of a firm for a long time, and that firm had a merger and he quit that firm. So he was on gardening leave for some time, and he's been traveling. I've been trying to meet him. He says, not today, this week, I'm traveling here. So I said, so what are you doing? He says, I'm figuring out right now, I'm helping a few friends with their businesses, sort of pro bono. I said, but you've got equity? He said, yeah. So, okay, so future gain will come if that happens. And he says, yeah, so I'm traveling. I went with some friends to, out of the country. Yesterday, I went to another city because a very close friend's husband passed away. So I had to go. So I've dropped my everything and went. I went for a holiday with my family elsewhere. I got my parents here and we went somewhere else. He's saying, I don't think I can do this all my life. No. So I said, yeah, because I know that there is research which says that, bucket lists are normally completed in 18 to 24 months. And I'd heard this 15 years ago at some conference. So I said, yeah, I told him this. He says, oh, very true. And I said, here, I'll give you an example of another client who was exactly like you, thinking that, one merger happened. He said, I'm quitting. And he said, okay, I'm now going to, my interest is in music. So I will create music instruments, etc. My daughter will get married. I want to go to Stanford and study an executive course. And when I told him this client yesterday told me, Stanford, funnily, that's on my list as well. So, you don't know what will connect with the client. When you tell them things like these, which you have learned from other clients, obviously you keep confidentiality, so I'm not giving names. And he relates and he says, oh, you've done this before? I said, yeah. And this is what the client did thereafter. Because after 1.5 years, he also was, I'll help private equity firms to, do my area of work. I will get equity, all that. One fine day, he got a job as country manager in some tech firm and he joined it again. And he's back in the rat race all over again, which he felt that, no, I'm never going to get back. Right? So I said, I've seen this happening and there is evidence that this is the time frame it takes. And he says, yeah, wonderful. I agreed totally. So here is this money. I've got this. Tell me what to do. So I told him one or two, but I said, okay, I'll share with you later. But let's make sure that all the different goals and aspirations of yours are taken care of. And that's very important.
Fantastic. So, it's just a very interesting. And when you said the conversation in the beginning, which you said about the framework, and probably we have a conversation that framework to that templatizing over a period of time, because the templates will undergo change. A lot of experiences will come back home after a conversation, what you spoke, so that next conversation become relevant and conversation becomes very rich. And that way we can capture a lot of qualitative data than the quantitative data. Quantitative data is always visible, but qualitative is underlying, which can make the changes for us. And here, there are some questions which are coming from simultaneously. I'll take those questions coming from the audience. Here is a question coming from Imanshu. I mean, here is this question says, Imanshu says, should MFD offer multiple investment asset class product to the investors in financial planning? And which are those? How should an MFD track the portfolio of investor? Of course, certain things are generic, but if we can club these three, what is an answer we can look for?
I mean, tracking, definitely technology. If you're looking at scale, unless you have got very limited number of clients and you can try Excel sheets or whatever that works for you. And I think on the multiple products, simple, think about it from the investor standpoint. The investor wants the multiple products. So he will get exposed to the multiple products somehow, whether it is through media or somebody else will approach him and say, here are multiple products. So if you are not offering multiple products, you'll lose the client. You can decide whether you are going to offer the multiple products yourself or you're going to outsource. You don't have to have everything in-house. I think that's, again, very important for you to recognize that if I decide, oh, I'm going to start giving tax advice, I have to become chartered accountant or I have to get a CA in my firm. You don't need. You have to just tie up with a few so that you can offer that service. If you are offering service of will, tie up with a few people who can offer will for you. If there are certain products that you don't have with you, again, tie up. But if you're not able to offer a solution which is for the client, which is all pervasive, then there is always the risk that you will lose the client because the other person who's offering that other product, let's imagine you're doing mutual fund, somebody else has come to him and said health insurance. Somebody else has come and said fixed income products. One of those other two might be offering MF mutual funds as well, plus many other things. And let's say he finds all three are great and good service and, it's all fine. Obviously, if I come across a client, I'm going to tell him that this is the range of services. Yeah, right now you're only, in my shopper stop, only buying men's shirts. But you want luggage, it's available. You want perfume, it's available. Jewelry is also available. It's all there. So you just take this escalator inside the store only down. You will get all of this available. Then why will the person not think about it at least? So you'll have to have very strong exit barriers to prevent the client from going out. So if you don't do that, then there is a risk. So keep that in mind.
Absolutely, sir. Very interesting questions are coming from the audience. When looking at that is provoked. The one question which is coming in is all clients are not equal. Some of them are highly wealthy clients, and handling them is not easy. And you can't get them right on the needs and requirements, because for them needs and requirements are very different than the other general clients. And when you get even I myself, I have a good experience with some of your clients whom I had a privilege to meet them at various places, and they were so happy. And when they are started their financial planning from your side, and it's a 1 decade, and not only they made money, they experienced. They are with you on that. And here is a question which is coming is like Mr. Kunj. One is how to convince the wealthy clients very differently, and there are some different. There are stubborn clients. How to make them invest?
I mean, you can only bring that horse to the water, and you'll have to try and convince them on the benefits of investing. The one way that you could do is to do the reverse psychology and say, what is it that you are missing by not investing? Not only in product, but the product through you, right? You don't only want them to invest, you want them to invest through you. So you'll have to give examples. I mean, I can't give a generic answer about stubborn people. And I think somewhere you'll have to have an exit sort of boundary and say, I will try till this level. Of course, there are enough sales books which say that, there are clients who converted in the 21st call and you stop calling after 15 or 17. Then you miss that conversion. Now, it's up to you how much time you have and what sort of segment. But I think, again, if you identify that that is your segment, then you will have to do enough work to say, okay, my segment is to get stubborn clients to invest, and do enough research about what causes stubborn people to move from their stance. Maybe a psychologist, maybe, you need inputs from there as well, is what I would think.
Yeah, here, the extension to what you said, Lovaii sir, is any client, whether he's a stubborn or not stubborn, if you as an advisor, you have your own vision and mission, and this is my set guidelines. If you are preaching good times and bad times and the same thing, people invariably will come back to you. Some may come immediately, some may come later. And if I also become volatile along with the market, then clients may not trust. And that's where it's the most important part. All that I need to do is I need to manage my emotions, and I need to have my own value framework for myself. Even, good times, I will not go bounce back and this will do, and bad time. Sometimes I go and this is my performance of the scheme. It is very good. When performance is bad, when he is asking, then you have a question to ask. And it's what you are sticking to is most important. Here, the question comes very differently on the team side. Here, a question coming from Karthik here. Karthik is asking, experience with the team building, and most of your team sticks longer, and what is that you do to make them stick for long?
We try to do a few things. We are not perfect, so there are times we regret having lost people. But I think the few things that that we do look for. Number one, that we are in the trust business. So initially, I remember that many people were not recruiting team members because they said, oh, my team member will take my client and go. I said, that means you don't really own the client. So you have to find ways to own the client, not the money of the client, right? So you should have the conviction that, yes, your team is not going to take the client and go. That first belief you start. Then if they go, you figure out what to do. But I think for the team members, there were few things that helped. Number one, I sort of tried to ensure that we created an environment of learning. So earning would follow later. So we made them do more, I would say, give them more responsibilities than what they think themselves they are capable of. Because every human being has the ability to do a lot more. We get lazy. Forget stubborn clients, we are stubborn advisors and distributors as well. That this is all I will do. I will not do more than this. So I think that's number one. So give them more responsibility. Second, allow them to make mistakes, and encourage them actually to make mistakes and say, okay, fine, you made a mistake. This is your learning. Ensure it doesn't repeat. Of course, you get repeated mistakes, then that employee you should have to let go. But give them that. And the third is we want people, I mean, we've been in business for 2 decades, as you mentioned. But I still, when recruiting people, even with experience, they say, oh, I'm joining a 2-decade-old firm. I said, I want mindset of a startup, because, you know, we are not stuck with anything that exactly this is the way it is. So some of my colleagues who left, let's say, the organization 5 years, 7 years ago, if they come today, they might not recognize some parts of the way we do business. The core is the same, the value systems are the same, the mission is the same, but how we do, what we might tolerate, not tolerate, is different. And that's what we encourage people to do at all levels. So I think that helps. And then obviously you have to have conversations with them. Just as you have conversations with clients saying, you know, what are your dreams and aspirations, you have to talk to your team with dreams and aspirations. And remember one thing, a lot of, you know, us all started as solo entrepreneurs. So you think, you know, your 40%, 50% profit margin is all yours. You'll have to let go some of that if you want to grow, which means that you might make only 10%, but it will be a much higher absolute amount than what you are making at 40, 50%.
I think, but you know, what you said is, I was watching most of your colleagues, your team, and I could see one first thing I see in most of them is the belongingness, and each of them are the true owners. You know, when I talk to them, when Lovaii sir is inside, outside, but I can see the same language. They say they are the owning part, and I have also seen those who left as those who are staying with you. They are highly knowledge centric, and you know they are always upgrading. They are always the way they communicate is fantastic. I think their learning curve is growing. That's where they stick for longer, and it's kudos to you and the whole process you evolve, and it's fantastic. Now, I think quickly before we running short, few questions very interesting. This is a Palaniappan Kanappan question. It's I think most of the MFDs face this problem. How you carry out rebalancing of the portfolio for a client, for an investment, for a particular goal?
So I think that any goal that's coming up in the shorter period of time, and that shorter period could be different for different clients and different situations, but it could be anywhere between 6 to 18 months. At that time, you start making sure that the money moves to safer zones, so that the market does not impact their goal. You know, that is very important, because meeting that goal is very crucial for that client. So that's what we do. And at that stage, if I move money out and I am now forecasting going ahead, let's say the client has a portfolio value is 100 today, and there is 10 rupees required for that client's goal in the next 7 to 8 months, and that is moved to a safe place. Then I will relook at the portfolio as if it is 90, removing that 10 and saying, okay, now, if the client is comfortable with 50-50, is that current equity investment 45, or is it 40, or is it 50? And accordingly, we'll change that allocation. So it is a bit dynamic. But we know that clients' big goals don't come up every day. You know, there may be 2 or 3, sometimes 4 goals in a year at the most. It won't be like something coming every month. So that's the way we would do it.
Fantastic, sir. And you know, this probably last but one question I'll take here is coming from Mr. Viskunj Lalka. And nowadays investors are media influenced, and hence they do everything on their own. And how to convince them and bring them on the table? Probably, I mean, by this time people would have learned, and we have seen many cases now, and they're winding the shops. Probably answer from you, sir.
Yeah, so I think that media influence is there to stay. So you have to recognize that. And I think what you mentioned, Mr. Rao, right at the beginning, is that you stick to your area of comfort, your values, don't get swayed. So there may be a lot of pressure from clients saying, no, I should invest in crypto. I should be in, different asset classes, which are giving phenomenal return. And you be consistent with your advice and the reason for that, not no, sorry, we don't do it, but there should be a logic behind it. So you need to get into a little bit of detailing. So I know when it first came, we actually, one of my team members actually invested small amount in crypto, withdrew the amount, and at that stage he found that the differential in price between investment and exit was 10% plus. It was very early days, I'm saying. But that was very easy for us to tell client that you may see that, oh, 100 is become 120, but actually you will get only 108. And you can see how volatile it is. Are you comfortable with seeing a 40%, 50% drawdown, once every 3-4 months? If you're willing to do that and with some small portion of your money, sure, please go ahead and do it. But otherwise, we have sort of now stuck to saying that we will get, and I mean, stay with only regulated products. So there are lots of fancy, and yes, therefore we may be behind time. Something, not all new products will fall by the wayside. Some new products will actually get regulated, and then it'll be a thing that, oh, everybody's investing. So we don't mind being little late, but we rather be safe than sorry. And therefore, we have to remember one very important thing. Our job as, whether you call yourself MFD, RIA, whatever, and I know the RIA standard is fiduciary. I think everyone who handles somebody else's money, it is a fiduciary standard. There cannot be any other standard. You can't deal with money, whimsically or based on, oh, I know only this product, so I will put all the money in only small cap or only large cap equity or only US based investing. You cannot do that with somebody else's money. Your money, do whatever you want, because you are accountable to yourself. That's fine. But when you are in a fiduciary role, you have to stick to saying these are the reasons why we are not recommending something. And yeah, so if you lose some business, you lose some business. It's fine. And you don't have to go back to that investor and say, see, I told you, now you must have lost 80%. Don't try and get those wins. The win is when the client comes back to you and says, okay, now invest for me. You have to forget this, that they came because you had told them don't invest, they lost money, burn their fingers, haha, see, now they've come to me. Get that out of your head. That I think your own ego is sometimes a barrier for your growth.
Very well said, sir. One need to be pragmatic and one need to be generous enough and accept and I don't interfere on those conversations. And definitely media is to entertain and advisor is to empower. And this entertainment will not last longer. You need to wait for it. And that time will come. You need to have that patience. And not only patience and perseverance for investment, even for giving advice, you should have a patience and perseverance. And I'll have a last question for you. Already we have we have exceeded the time. This question is, with these 2 decades of experience, lot to tell, lot learning. If there is a 3 things, if you have to tell the advisors how to grow their business, what are those 3 learnings they can take away from today?
Act in the interest of client, keep learning, and don't get stuck in the past. Top
Fantastic,
3.
sir.
Yeah.
Fantastic, sir. Very precise. Take care of the client. Client comes first, and always upgrade your learnings. I mean, learning requires de-learning and relearning. It's a constant, and never stuck to the past. Things will change, and of course, and the future belongs to you when you are in the present and you are there. It is a fabulous advice. It's always a great conversation. A couple of them, my apologies, Mr. Rane and Mr. RV, for. Raise the hands, paucity of time, we cannot allow, we couldn't speak, but nevertheless, we get a time. You can always write and IMPL. You get a lot to learn if you can go to their website. There is so much of information for you to learn, and it's a lot. And there are few things which you can exclusively learn from Lovaii sir is on the financial transition. No one in the country I have seen who has worked on it, who got the knowledge, who got the certification, who has done that was a very important role people play. Not just wealth management, but wealth management we would have seen here and there. Everyone, many of us will do, but financial transition, very few people. He is one of those. And please have a look at their website and a lot to learn, and follow him on his Twitter, and it's a lot will come on the LinkedIn. And thank you so much, Lovaii sir. It's a great learning, and truly I say this is a learning from the master. One is with your profound experience, the learning is really great. And as you rightly said, continuous upgradation of the knowledge and probably lifetime learning is a process which you have mentioned. I quote Mahatma Gandhi, right? You need to live your life like as if you die tomorrow, and but you need to live your life. I mean, you need to learn as if you live forever. Probably learning should be always, and it's truly you're a master. You have skilled. You have an authority on that, and this is a series of learning from the master got. Better over to start with you as a second series to get that master. I'm sure it is useful for many of our MFDs, and I look forward they get benefit out of it, and it will enrich and empower everyone. Thank you so much for this. Thanks Nishant, Prem, Anita, Cafemutual for making this series continue. And over to you, Nishant. You can come down and thank you so much once again. Thanks, Lovaii sir, and thanks to all the audience. Wishing you all the good luck and happy Guru Purnima in advance. And our first Guru is here. Thank you so much, Lovaii sir, once again. Over to you.
Thank you. Thank you so much. I really enjoyed this. And when people are visiting website or getting in touch, if there is something I can learn from them, please share. Would love to continue learning.
That's so nice, sir.
Great, good thoughts today. So, all right, we have come to an end to this interesting session. Lovaii, you have given a lot of learning to our audience today. Thank you so much for such an insightful session. And KS, as always, you did a fantastic job. You put everything in perspective, which is very easy to consume. Thanks again.
Thank you so much, Nishant. Look forward to. Thank you so much. Thanks, Lovaii sir and Nishant.
Thank you.